China's economic growth in the last few decades is a well-known success story. Less well-known and a subject of some disagreement are the sources and factors that have produced that economic growth. This is Steve Wiseman at the Peterson Institute for International Economics, and I'm pleased to be here today with Nicholas Lardy, Anthony Solomon, Senior Fellow at the Peterson Institute, to offer a preview of Nick's new book, which is called Markets Over Mao, The Rise of Private Business in China. It's going to blast away at a lot of myths about China's economic growth. Nick, let me ask you first, what's the main takeaway of this important new book?
I think the main takeaway, Steve, is that China's economic success is primarily the result of the rise of market forces and particularly the rise of private businesses in China over the last 35 years.
Now, a lot of people think that China remains a state-controlled, state-driven economy with state-owned enterprises leading the way. Why do people still think that?
Well, in part because state enterprises are still quite important in a few sectors of the economy and a few industries. But if you take the broad view, for example, in the manufacturing sector, state companies, along with their collective firms, which were local state companies, produced 100% of China's manufacturing output when reform began more than 35 years ago. Today, they're down to less than 25%. So that whole state dynamic, the whole state sector is basically fading away. It has been displaced by more dynamic, more productive private firms that are now responsible for the vast majority of China's manufacturing output.
And also of its exports, I think you demonstrate as well.
Yes. Not so long ago, state companies produced about 2/3 of China's exports. Today, they're down to about 10%, and private firms have become the major driver of China's export engine.
Now, that's one reason why it's a hot issue, isn't it? Because people like to think, well, there's an unlevel playing field, to use the cliche, and that somehow the state is pumping out or subsidizing or helping this huge success that China's had in exports. But you demonstrate in the book that that's not true.
Well, I think the state has attempted to prop up certain kinds of firms and big state-owned companies, but I would say the message of the book is that this effort has failed. These firms have not succeeded. They are not producing more profits relative to the rest of the economy. Their share of output is continuing to fall. And worst of all, their efficiency is going down. So that these state companies that have been given certain privileges and advantages have not been able to capitalize on them. They're earning less than their cost of capital, so they are a bigger drag on economic growth today than they were in the past.
Now, what are the implications of this for U.S. trade policy toward China?
Well, I think the main implication is that we have not taken adequate account of the fact that this has become predominantly a private business-driven economy. We focus a lot on the few examples of where state intervention still occurs, and we should, but I think there needs to be a broader recognition that the private sector has become the big driver of economic growth in China. This is one of the most fundamental transformations in economic history.
Now, if you look at this book, you see that there's a huge amount of economic data from China, and I think that's one of the things you've contributed. Tell me a little bit about how you went about demonstrating and backing up this thesis with real research.
Well, it's a matter really of looking very closely at a great wealth of information that's generated in China. Every government agency is putting out all kinds of data, and they all point in one direction. And that is that the state sector is shrinking, it's inefficient, it's not producing the exports that it used to produce. And a lot of people are critical of Chinese data, but I think you have to raise the question or ask the question, if the state's really manipulating all the data, why are they making state companies look like they're all failing?
Right, I was going to ask, I mean, how reliable is the data? But if it were but it's not exactly self-serving to the state.
Exactly. It's the opposite of what you would expect. If you thought they were manipulating the data, you would expect that, at the margin they'd try to enhance the performance of state-owned companies, but that hasn't been the case.
Well, thank you very much, Nick. And I should have mentioned at the outset that we'll be presenting this book at an event at the Peterson Institute, which will be webcast live on Wednesday, September 10th at 12:30 afternoon. Nick, thanks again very much.
Thank you, Steve.